The Bank of England has got its own story to tell as well, completing its first bond auction. This as it begins its quantitative tightening process, active quantitative tightening. It sold £750 million of short-dated UK bonds, or around $860 million. Bid to cover just north of 3. A bit more than just north of 3. Philip Aldrick joins us now to discuss this from our economics team. How significant a moment is this, and how did it go?
Well, it went very well, didn't it? And it is a very significant moment. This is the first time a leading central bank has attempted quantitative tightening, active sales of the gilts they hold, and they've got 3.6 times cover. The markets have just absorbed this. There's a lot more coming. Yeah. So this is it's an important moment, and it's been a good one so far.
Do we know how much the BOE lost on all of this, and what's the significance there in that?
So. We don't know quite how much those calculations are being done, but it'll be probably around £100 million that they've lost on the £750 million pounds of sales. The significance of the loss is that the QE portfolio, which had a huge profit, is now carrying mark-to-market losses of around 200 billion, maybe just south of 200 billion on 875 billion of gilts that were bought. So that's going to be a big deal, and obviously there are losses that are going to be borne by the taxpayer here because there is this transmission mechanism through this commercial banks where interest is paid on to commercial banks through the QE program, and so there are fiscal implications for what's happening with quantitative easing.
They're going to have to tread very carefully, though, because they're going to have to manage this with the DMO, the Debt Management Office, in terms of the durations that they are going to be selling back into the market. And there's certain key tenors here that have been left out because the DMO's selling that tenor as well. How's it going to work? Because at the moment we're doing shorts, relatively short dated. As we start to get longer dated, does it become more complicated?
Well, they're avoiding that at the moment because obviously we had the problems in the longer dated end of the market. Obviously, they've started with the ones that the area they knew they were going to get a good start with, and as they. We're going to be doing sort of £40 billion worth of sales a year. That's what the bank is aiming at, which is a lot. So they are going to have to push into more difficult maturities. So there could be stickiness later. And also at that point, as you point out, the DMO is going to be doing a lot of issuance as well. So it's going to get trickier from here on in. But this is a good, stable start. The market's absorbed it. We're off and running.